All right, let's dive right into this. Welcome to today's Explainer, where we're absolutely cutting through the noise to bring you a focused, data-driven deep dive into the Indian stock market for August 13th, 2026. If you're trying to figure out exactly where the smart money is moving right now, and you're hunting for top recommendations or potential multi-bagger picks, you are 100% in the right place. We've got a lot of ground to cover today, from research-backed fundamentals to high-momentum technical setups, so let's get straight to it.
So here is the big question we're answering for you today. Which 7 specific stocks are showing the absolute strongest signals for a massive breakout in today's session? We're going to unpack the exact fundamental and technical catalysts driving every single one of them. Plus, you'll definitely want to stick around, because a little later in this explainer, I'm going to show you a brilliant 15-second chart trick used by the pros. It will literally change how you draw your support and resistance levels forever.
Okay, here's our game plan. We'll start with a quick market overview and key levels, look at our sector winners and losers, dive into the top fundamental picks, check out some high momentum breakouts, and then we'll wrap it all up with that liquidity sweep strategy masterclass.
Moving into Section 1, Market Overview and Key Levels. Let's get a read on global cues and our previous closing data.
There is a massive tug-of-war happening in the markets right now. On one side, we've got some really positive global cues. U.S. consumer inflation actually cooled down to 3.4%, which is great because it dials back fears of further Fed rate hikes. But on the flip side, all that optimism is getting dragged down by elevated geopolitical uncertainty in the Middle East and concerns over crude oil, even though Brent did manage a slight dip to $89.75. This friction is exactly why we saw a mixed close. The Sensex managed to scrape together a 114-point gain, but the Nifty slipped below 24,400, and Bank Nifty took a bit of a hit, dropping 251 points.
So what does this all mean for the charts? Well, these are your crucial trading bounds heading into today's session. Based on that closing data, Nifty is sitting right in the middle of a very tight channel. You've got immediate support at 24,300 and immediate resistance at 24,500. For Bank Nifty, which obviously faced some heavier selling pressure, your critical floor is 57,400 and the ceiling to watch is 57,900. These are absolutely your lines in the sand for today's price action.
Section 2, Sector Winners and Losers. Let's track exactly where the institutional money is flowing.
The main takeaway here is the really sharp contrast in sector performance. We're seeing strong defensive buying and momentum pushing realty up nearly a full percent, and FMCG is up 0.84%, which is being heavily led by stocks like Tata Consumer Products. But on the other side of the coin, metals took a hit of over 1%, mostly driven by profit booking in names like Hindalco. It seems like everyone wanted to cash in their chips early there. Financials also dragged the broader market down a bit by 0.37%, and that's largely due to market anxieties surrounding the RBI's proposed loan pricing framework, which is putting pressure on banking shares like ICICI.
All right, on to Section 3, our top fundamental stock picks. These are the research-backed plays coming straight from Univest.
We've got 4 standout names hitting our screens right now. Power Grid and Bharat Electronics are flagging as top gainers with some really solid, steady action. Meanwhile, Electric Green Tech and Mazagon Dock are absolutely pinging the high-momentum scanners. Let's break down exactly why these 4 are commanding so much attention today.
First up, let's talk about the stabilizers. Power Grid is just a fantastic, stable utility play. It's sitting right in the middle of its 52-week range and is a prime beneficiary of the government's long-term grid expansion mandate. Then you've got BL, or Bharat Electronics. Now, this is a core, institutional favorite in the defense sector. It gives you great exposure to defense electronics like radars and missile guidance, but with a highly predictable order book. That means you get to avoid a lot of the wild volatility you usually see in smaller defense stocks.
Now let's look at the high momentum plays. A quick heads up, these naturally carry a bit more risk, but the fundamental narratives backing them up are incredibly compelling. Electric Green Tech is absolutely leading India's electric bus adoption, and they're backed by a massive order book from state transport undertakings. Then we have Mazagon Dock. Sure, it's pulled back about 9% from its 52-week highs, but it holds a massive strategic moat. Get this, it's one of only 2 Indian shipyards capable of building nuclear-class submarines.
You know, this actually hits the nail on the head when it comes to investing strategy right now. As Ankit Jaiswal from Univest points out, the market is currently a tug-of-war. Having a constructive mix across diverse themes, like power infrastructure, defense electronics, the EV transition, and shipbuilding, is absolutely vital. When you aren't completely sure which specific sector will take the lead on any given day, having broad, high-quality coverage acts as your very best defense.
Moving right along to Section 4, High Momentum Technical Breakouts. Let's look at the chart patterns signaling some imminent moves. We are kicking this off with a highly anticipated target price, 985 rupees. This is the exact level technical analysts have their eyes glued to for our first breakout candidate. And that stock is Indian Bank, which recently closed at 897. After consolidating near its 50-week moving average for 3 solid months, it is violently breaking out. This is being driven by an inverse head and shoulders pattern. If you're not familiar, that's essentially a chart formation that signals a major reversal from a downtrend into a fresh uptrend. With a successful retest of this pattern currently underway, Indian Bank is primed and ready for a really powerful rally toward that 985 target. Next up, we have a target of 735 rupees. If you remember our sector overview from a few minutes ago, realty was the top performing sector, and this stock is the one leading the charge.
The stock is DLF, closing at 661.75. So the key thing to watch here is that DLF has spent an entire month unfolding a very tight pennant formation, and it's now sitting right at the upper bound, just brimming at the breakout threshold. Even better, its 14-period ADX, which is basically a gauge that measures the strength of a trend, is trading near its lows. This strongly signals an impending expansion in volatility. With a rock-solid base formed at 630, this chart is literally like a coiled spring, just waiting for an explosive up move towards 735.
Finally, take a look at this massive 5-figure target, 10,030 rupees. The sheer magnitude of this potential move is definitely what's grabbing all the institutional attention right now.
And that stock is Polycab India, last closing at 9,289. Since late June, Polycab has actually undergone a really healthy correction. But here's the incredibly bullish case for it. The stock has successfully retested a prior resistance level, which is now flawlessly flipped into a robust support base. It's a perfect role reversal. You combine that with a near-term trendline breakout on the daily chart, and Polycab is perfectly positioned for a massive run toward all-time highs.
Okay, let's bring it all home with Section 5, the liquidity sweep strategy. This is your 10-minute trading masterclass. So before we talk about the sweep itself, let me show you that 15-second shortcut for drawing incredibly accurate support and resistance lines. It's really this simple. Open up a one-day candlestick chart, mark the exact open, high, low, and close of that daily candle. Why do we do this? Because those 4 data points are universal price truths. If you draw horizontal lines at those 4 points and then drop down to a smaller time frame, like say a 15-minute chart, you're going to find that these lines act as absolute magic for day trading support and resistance.
Now, what happens when the price actually approaches those lines? Enter the liquidity sweep. A liquidity sweep happens when a stock's price intentionally dips below a previous obvious low. Retail traders see this, they panic, assume it's a breakdown, and their stop losses get triggered. But guys, this is a trap. Big institutional players are deliberately sweeping those stop losses to gather enough liquidity, meaning enough buying power, to heavily reverse the trend and surge upward. What looks like a breakdown on the surface is actually a slingshot. But you don't want to just buy the dip blindly, right? You have to wait for confirmation, which brings us to BAMS, break in market structure. After the liquidity sweep happens and the price reverses upwards, you wait for the price to successfully break the previous swing high. Once it breaks that high, the new upward trend is confirmed. Combining that sweep with a break in market structure gives you a highly confident entry point. You just place your stop loss right below the sweep low and aim for a minimum 1-to-1 target.
And there you have it. We've covered the macro tug-of-war, we've broken down 7 top fundamental and technical stock picks, and we've given you a pro-grade strategy to time your entries perfectly. The market is live, and the traps are set. Armed with this liquidity sweep strategy, are you going to be the one getting trapped today, or the one riding the slingshot to a massive breakout? The opportunity is all yours. Thanks so much for joining me on this explainer, and happy trading.